And welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment, sponsored by the Resource Center. Good to see you.
Good to be here.
Yeah.
Okay, we're going to talk about money traps today.
Yeah. We're going to talk about the things that mistakes people make during economic crisis. I think that's kind of timely because we're either in that or approaching that very rapidly. So we're going to talk about 5 different things today, 5 topics: buying a house, credit cards, fixed expenses, 401k loan, and a low retirement age. We're gonna dive into this. So let's go right to number 1.
All right.
You know, buying a house, that's a significant investment. Usually, like for young couples, that's an important thing. And so when you're buying a house, I think that you've really got to think through that. I think you have to determine, based on your career, based on your family size, is now the time to buy a house or not? If your career has not been established, I think it could be a mistake to buy a house and then in 2 or 3 years have to sell that house because you're moving. And so, you know, considering that, I think that you should hesitate until you have a very ironed out career path. Same way if you haven't started your family yet. Now, it's always good to plan. So if you're going to be starting your family, I think, you know, getting a house under your belt could be a good thing.
But it's not necessarily for everyone.
Well, it's not, because
true.
it's a lifetime obligation, you know, and I think people don't really consider that as often, that, you know, this is a commitment for 20 or 30 years, and you can't always plan on selling and coming out and all that, because right now we've had this housing bubble, and then if it corrects or comes back a little bit because interest rates have went up, interest rates are going to continue up, that's going to potentially cause a crisis for somebody that's, you know, a career change or having to move for whatever reason. So
when you look at it as an investment, it's not a guarantee.
Right.
No investment really is.
Home ownership is a dream a lot of people have that a lot of people don't get, and they try it and then they end up in a crisis financially because they either overbought or they bought too soon. You know, focus on your reserve cash. Focus on those things. Be in a financial position to buy a house before you buy the house.
Exactly.
Right?
And you mentioned career stability down here, and that's something to consider too. How are you going to live in the house?
Absolutely. Now,
I'm going to, about 3 minutes left, so I want to move on to number 2, which is credit cards.
Credit cards.
That goes without saying.
Yeah, I mean, the bottom line, you can use those to build credit. You can, if you use them correctly, they will help you, right? But here's what you don't do. Don't get a $10,000 or $15,000 line of credit on a credit card just because they're offering a good deal. If you're just starting out and you've never had a credit card, get a $1,000 or a $1,500 limit and pay it off every month. Use it correctly, and it can be an advantage to you, not a disadvantage. Never get into a crisis.
Yeah, some people they look to build a credit rating, that sort of thing.
It can do that.
But if it's used properly.
That's right.
Not just using a credit card.
That's
not going to do it.
That's right.
You think it can make it, but can break it too. All right.
That's right.
Number 3, fixed expenses.
Fixed expenses, I think right now with fuel, I paid $4.40 a gallon, right? And here we are in the Ozarks, so shop your car and home insurance. You know what? Temporarily, you may have to raise your deductibles in order to lower your expense.
Right.
And that's a temporary fix because it can increase your cash flow, it can save you money. And so if you focus on that, that can help right now. You can always lower your deductibles later on. Reoccurring charges, whether you've signed up for, like I have a car wash monthly expense, maybe you need to cancel those things until things kind of settle down.
Right.
Household bills, you should always be looking at your budget. Let's go to number 4.
Number 4, 401k loan.
Big mistake you make in a time of financial crisis. People go to their 401k and borrow money. I would advise against that. You need to take advantage of compounding and deferred growth. Try not to touch your 401ks for a current event problem. Try to keep things in perspective. Shop your car insurance. Do other things rather than that, and it'll pay off in the long run. And number 5, if you're considering retiring right now, you might want to rethink that. I've often told people, establish what your retirement budget needs to be, live on that budget for 6 months before you retire. And if you're doing it and making it, great. If not, you got to rethink it. You got to focus on your cash reserves. You got to have reduction of your debt, and you have to be willing to go out and create additional income if inflation takes over.
Yeah,
Right?
So much to think about. And you
That's
can
right.
reach Bruce at the Resource Center, his website, resourcecenterinc.com. Call him up, 417-882-1800. It's good to see you.
See you next week.
We'll be right back.